For improved system performance, long-term financial returns, and less risk on your PV projects, look to the proven performance of DuPont Materials and Solutions.
Hello again and welcome to this week's PV Tech Newscast. Coming up, Suntech claims to be victim of massive fraud over GSF investment. European solar manufacturers launch EU ProSun initiative and urge investigation of China trade practice. And Trina Solar and Canadian Solar to miss Q2 shipment forecasts. There are more questions than answers at the moment over the announcement by Suntech that it had started multiple legal proceedings against a number of parties regarding investment guarantees it provided for a joint venture PV power plant project developer, Global Solar Fund. However, Suntech has claimed that a pledge of 560 million euros of German government bonds by a third-party investor in GSF Capital, may never have existed. Suntech said that it may have to delay second quarter financial reporting as a result. According to Suntech, recent efforts to monetize its investment in GSF led to the discovery that the collateral related to the security interest may not have existed, and the company may have been a victim of fraud. An investigation and financial impact assessment is being undertaken, yet it hoped to publish key financial figures in the week beginning of the 20th of August. According to investment bank Jefferies, because GSF is an off-balance sheet entity of Suntech, there is no immediate impact on its balance sheet or cash flow. However, should Suntech need to take control of the GSF, it could add $1.4 billion of assets, but $900 million of further debt. Concern within the financial community is that Suntech is already highly leveraged with debt. A group of European solar manufacturers that include SolarWorld and insolvent Cervelo have officially launched their own initiative to urge the European Commission into investigating what it considers unfair trade practices by Chinese solar manufacturers. The EU ProSun initiative states that its goal is to maintain a sustainable and vibrant solar manufacturing base in Europe. The group is said to be comprised of over 20 European companies, representing many in the EU solar industrial production sector, and is following the format adopted by SolarWorld in the US over the anti-dumping case it successfully led in the country. The German-based PV project developer Sunstrom has filed for bankruptcy at the Weinberg Dresden court, according to the provisional liquidator HWW Weinberg Wilhelm. The firm was a subsidiary of SolarWatt, which filed for creditor protection back in June this year. Sunstrom has been in operation for 12 years and has been known for some high-profile PV projects in Germany, such as the rooftop installation at BMW World. In related news, bankrupt thin-film pioneer Energy Conversion Devices and its wholly owned subsidiary United Solar Avonic have had the majority of assets successfully sold, meaning the company's affairs can begin winding up. The sale of intellectual property and real estate was said to be underway. Turning to financial markets, both Trina Solar and Canadian Solar have warned that module shipments in the second quarter would not meet previous guidance. Trina Solar lowered its shipment guidance due to US market weakness after countervailing and anti-dumping duties were imposed, as well as a push-out of unidentified PV power plant projects in China to the second half of the year. Module shipments would be in the range of 390 to 420 megawatts, down from between 500 and 520. Although solar module shipments are still expected to be higher in the second quarter, Canadian Solar cited weaker than expected demand from the US for the shortfall. The company had previously guided module shipments to be in the range of 430 to 450 megawatts, but revised shipments down to between 410 and 420. However, PV inverter specialist Power One reported better than expected second quarter results on the back of strong demand in core markets, Italy and Germany. The company shipped a record 1.3 gigawatts worth of PV inverters, with its renewable energy business generating $255 million in sales. And finally, a next-generation roll-to-roll CIGS thin film firm, Solarion, has started production at its first plant in a new industrial park in Zweckenau Süd near Leipzig in Germany. Primarily planning to target the difficult BIPV and commercial rooftop markets, the company is claiming an initial 10% cell efficiency and a 20 megawatt annual capacity. Solarion said that it had invested approximately 60 million euros in the new facility, which would eventually employ as many as 150 people. Initial products will actually be glass CIGS modules, while its flexible modules are planned to be launched in 2013 after obtaining IEC certification. Well, that's all for now. More on today's and other stories can be found on the pvtech.org website. See you next week.